Escrow accounts, let's break them down. An escrow account, sometimes also called an impound account, is a fund set up by your lender to pay your property taxes and your hazard insurance, also known as your homeowner's insurance. The lender collects a portion of your monthly mortgage payment and deposits it into an escrow account. This ensures that the essential payments are made on time, reducing the risk of liens or default on your property. So essentially, an escrow account is just a savings account which is held by your mortgage company to pay your property taxes and your homeowner's insurance so you don't have to pay them in a lump sum at the end of the year. Lenders typically require an escrow account if you're putting less than 20% down, if you're a first-time home buyer, or if you're a borrower with blemishes on your credit history, or you have delinquent taxes. Can you waive escrows? In some instances, yes, you can. If you have a minimum credit score of a 620, an LTV loan-to-value of at least 97%, and approve eligible AUS findings. Waivers are not permitted on government-backed loans like USDA or FHA, except if you're a veteran. VA borrowers can waive escrows even at 100% financing. VA first-time home buyers can waive escrows if their FICO score, Fair Isaac Corporation, is 680 or higher if the LTV exceeds 80%. Here are some of the pros of an escrow account. Convenience. No big lump sum payments at the end of the year. Your lender automatically collects and manages these funds to ensure timely payments of your property taxes and hazard insurance so you don't have to worry about it. Cons. Higher cost at closing. Your lender collects a few months of taxes and insurance in advance at closing to fund the escrow account. So it does add to your initial closing costs, but it's not an extra fee. It's your money. Another con would be an escrow shortage. If this happens, your mortgage payment can increase, but it only increases if your property taxes or homeowner's insurance increase. If this does occur, the shortage can be spread equally over monthly payments, or you can choose to pay the extra in a lump sum. It's typical for taxes and insurance to increase over time. So although it's a nuisance to pay a higher premium, it's actually indicative that your property value has increased. So it's not necessarily a terrible thing. On a side note, be sure your home is fully covered for its current value. All too often, I see borrowers with outdated coverage. God forbid your home is lost in a disaster. You will only be covered for the amount displayed on your homeowner's insurance declaration page, not necessarily the full current value of your home. So make sure you check that. As your property value increases, you will want to increase your homeowner's insurance coverage as well to reflect the current value. Personally, I like my escrow account as I have selected an escrow account with my personal home loan. Escrow accounts are there to simplify things, but they're not always required if you prefer not to have one. Either way, I'm here to help you decide what's best for you and your specific situation.